But talking about Jay Powell, he had an amazing, wonderful, that's probably the best interview that I've seen for a while. It was funny. It was poignant. Please go check it out. He had, I think it was Chicago Business Bureau. He had an interview, about half-hour interview. I watched the whole thing. I highly recommend all of you go watch it. I mean, the person that was asking the questions asked some really funny, cool questions. But one of the questions, so I'm on Twitter, right? I have all these fin tweets. They go, "Oh my God, market's crashing." What? Market's down 10% or 12% on the S&P and 15% on NASDAQ, and market's crashing? We just gave back what we got last year. Not sure. But that's because all these people have not seen a bear market, or they haven't seen a recession. All they know is markets only go up. Stonks only go up. New high, new all-time high, 50 of them last year, 55 of them the year before. People, stonks don't only go up. Stonks only also go down. And when they do go down, they take the express elevator down. They make sure of that. But going back to this interview, that was a poignant time. Because as we know, everybody, all these youngsters, right? They're all expecting, oh, there's a Fed put, there's a Trump put. They're not going to let the market crash. They're not. I kind of agree with that. But I think their put is a lot lower than where we are at the moment. So this gentleman who was an economist was asking Jay Powell questions. And I was like, okay. It was really, really great interview. Please go watch it. Yes, it had something to do with economics. It had something to do with his personal life, what he does, when he's relaxing, Jay Powell. Wonderful, wonderful questions, right? And I enjoyed it thoroughly, so please go check it out. But one of the questions directly was asked, Fed Chair Powell, will the Fed intervene if the stock market plummets? Straight up. And I was like, man, that guy has balls to ask him the question. And I'm now thinking, Jay Powell he's usually what he does is he dances around these types of direct questions, right? Which is expected because he moves. By the way, during that, this was on Thursday, the second the news reading algos got a hold of the statement that he's going to read. And, we have these things, right? There's news algos that read the news within 1 millisecond. By the time you're done with the first sentence of the news release, they have already read it and they're trading already, right? So that's what you guys are up against, all these day traders, right? They go like, oh, a day trade. I'm like, yeah, good luck with that. By the time you read the first sentence, they're already shorting spiders or futures. And the market tanked on Thursday, right? Okay, so the question to that is, will the Fed intervene, which is the Fed put, right? We've had that in the past. We had that in the 2008 crisis. We had that in the, during the pandemic. Fed put meaning, I mean, they won't directly go buy stocks, but what they'll do is they'll just release billions and trillions of dollars into the marketplace, create liquidity. So other banks and hedge funds and whoever investors are, they can, come stabilize the marketplace. So the Fed put, so basically it was asked, is there a Fed put? Is the Fed going to allow the markets to plummet? His response, no. The second he said that, the futures tanked another 10 handles. And I was like, wow. Because I had never heard in the last 5 years Chairman Powell commit to an answer like that. He goes, no, with an explanation. The market is functioning as it should, even though there are many uncertainties. Wonderful answer. So all the FinTwits on Twitter were like, oh my God, there is no Fed put. I'm like, just because your portfolio, high beta portfolio is down 40%, you think Fed cares about your portfolio? If you bought some Palantir at like $120 and it's 75, who cares? Fed doesn't care about that. But what Fed should care about is recessions, the mandate. So this was amazing, right? He goes, no. And the market is functioning as it should. And the market is functioning as it should. The market is pricing in a slowdown now. Market hasn't started pricing in a recession yet. But there's a lot of talk that's going on. Like the recession odds in 2025 are up to like 55, 60% now, which was zero. Okay. The timing of these comments is particularly important to note. Yes, it is. because he has this little tiff going on with President Trump. And President Trump is saying, lower the interest rates. Powell going, nope. Where's the Fed put? Like I said at the start, I think the Fed put is a lot lower on SPX than here. A lot lower. And when is that going to be? When I put up the charts, not that the charts are meaning anything these days. But my reading of the tea leaves with all this is that we have only given up less, actually, than what we gained in 2024. And that was done with hocus pocus, smoke and mirrors. Pump, pump, pump. Put trillions into the economy. Push, push, push. Assets go up. Hard assets, all hard assets going up. Real estate, new high. Gold, new high. Stocks, new high. Money has to go somewhere to get a return. Where did it go? Well, it went into stocks, right? Okay, so we're just not even giving up what we got in 2024. And all these FinTwits on Twitter and Facebook and YouTube, they're all like, oh my God, world's coming to an end. I'm like, no. And what the Fed Chairman Powell said, I agree. Markets are functioning the way they should. Stock market is the best pricing mechanism on the planet. Best. Sometimes it overshoots, sometimes it undershoots. But now we'll have 2 quarters at least of headwinds coming up. What are those? Earnings coming up now. A lot of companies are going to pull guidance. They're going to go, nah, we don't know. We have uncertainty. And markets are functioning perfectly well. Yes, the volatility is crazy, right? We're moving 4 or 5% every day, which is not normal, which will subside over, maybe a couple of weeks, couple of months period. But this is what we have. I don't think the Fed should intervene. Why should the Fed intervene? Okay, maybe we'll give up what we earned in what the indexes, went up by, I don't know, 25% 2 years in a row. Okay, maybe we'll give that up. What's so bad about that? We could just go back to 2023. It gives a lot of people who are going to be new investors a chance to DCA, dollar cost average, into markets or stocks that they want to own. But if you're holding a high beta portfolio and you're not hedging, or you did not hedge, and we know what happens to high beta stocks. When the market goes down 10%, your stock is going to go down 30% if you're a 3 beta portfolio. Don't be crying, Stocks only don't go up.